should be good to go. My name is Daniel, and I am with VantagePoint AI, and I want to take a second to say Happy New Year. I haven't had a chance to talk to you yet so far this year, so this is my first opportunity to do so. One of the key things to this year is going to be important to understand what the interest rates and interest rate potential cuts could do to the market. We're going to dig in on that some today. We'll spend some time as a group walking through what we're seeing from a software standpoint. Once we get a chance to say hi and make sure everything's working okay. So if you could make your way over to the chat box. I've got my eye on the chat box in YouTube. We are live in YouTube. So if you could just let me know that everything is working. You can see me okay. Thank you for joining. I see you in there, Audrey, already commenting. ISO, I see you. Thanks for the hand waves and the hellos. I love it. I love it. Let me just take a look. Bobby, got a lot of people in already. That's perfect. Hey, Stephen. Albert. Glad you're here. Glad you're here. How do I get started? I don't know if you're talking about this session or not, Albert, but we did put a phone number there for you to call if you've got some questions and want to dig into some more about getting started, or you can always go to VantagePointForecast.com. Hey, Mark. Looking good. Sounds good. JS, loud and clear. Hey, Tim. Nice to see you again, buddy. I had a good conversation with some of our VantagePoint family members last night, so it'd be nice to see some of them come into this session. John. Hello, sir. You know, it's 10 below in Michigan, but you guys are probably still feeling the warmth from that big win. At least, I guess, if you root for Michigan, so national champs. Congrats if you are a fan. Hey, Daniel. All right. It looks like we're working and everything is working as designed. You can see me on camera okay. I'll share my screen in just a second. We've got a lot of people jumping in. We're going to jump in right now. And my goal today is to talk through what the chatter, and it's really chatter is what it is, what the chatter around interest rate cuts can do to the markets and what's expecting to happen in the markets this week based on what the artificial intelligence is saying. And what I mean is we had really great retail numbers come in. Great in the sense that people are, from a retail standpoint, spending money. But that means the economy feels pretty good, which means rate cuts could be delayed, which is causing the markets to fall based on trader sentiment, investor sentiment. How likely is that to impact the market right now? How long is that expected to happen? We'll take a look at what the artificial intelligence is saying in today's session so we can get some of those answers. Let me just make sure my mic is here so you can hear me okay. Looks like it's good to go. Hey, Dan, John, good. Hey, Ray. Got a lot of great people in here. This session is open to everybody. So if you're not a VantagePoint family member and you're here and you're listening, thank you for being here. I'll take the time to walk through this at a level that I think everybody should understand. What we're looking at and how we're analyzing it. If you're not a VantagePoint family member or user, and if you are, I think obviously this analysis, you know how valuable this analysis is, and I'll walk through it at a pace that, we don't leave anybody behind and we don't go over anybody's head. I hope. If I do, just hit the chat box. This is a live session, so if I need to slow down or repeat something, I'm keeping my eye on the chat. I love interaction. I love the fact that you're taking the time out of your day to get involved and see what VantagePoint has to say. Just so that everybody that's in this session can know who I am. My name is Daniel. I'm Vice President here at VantagePoint, and VantagePoint AI is an artificial intelligence software program that's been helping traders since 1991. It is dual patented. We have 2 patents on this technology, and I'm bringing up VantagePoint right now on the screen so everybody can see that. I'll walk through what we're doing in the VantagePoint software in case you've never seen it before. I'll walk through the details. Just understand that this is a software that I rely on and have relied on for going on 14 years now. I've got about 25 years experience in the financial markets. I'm a trading educator from a VantagePoint standpoint, from a market standpoint, all asset classes, including options, Forex, futures, stocks, equities, ETFs. We'll spend our time cryptocurrencies, talking through all of those. My goal in this session, just so everybody understands, my goal is to just help you understand something about the markets, a golden nugget, a piece of information that you may not have considered otherwise. That's it. That's it. I'm not providing trading advice. This is purely educational so that you could hopefully see the markets in a slightly different perspective and give yourself the opportunity to be more successful. So if that sounds good to you, let's get this thing started. I have on the screen right now, and you can see right up here that I've got the S&P 500, the SPY. This is the ETF that tracks the Standard & Poor's Index. And what I'm looking at on the screen, for those of you that have never seen this before, by the way, if you've never seen this before, give me a me in the chat box. Let me know if we've got some people in the room that are brand new watching this live that haven't seen what VantagePoint does or how it does, and that'll help me kind of gauge the level of education, if you will. Just hit me or never seen it or something like that to let me know. What we're looking at is the SPY, and I am going to grab a pen here just so that we can all kind of follow along and be on the same page. I have 3 months of data pulled up. So we're looking at 3 months of the S&P 500. And you can see there's candlesticks on the chart. Every candle represents one trading day. I use all the end of day data in this software. Hey, Alan, thank you for being here. The end of day data comes in at 6:30 p.m. Eastern time. And what I'm going to do is just analyze the SPY and what I'm seeing based on the S&P 500. And then I'm going to layer on different indicators that I use to walk away with my comprehensive view or expectation of that market, in this case, the SPY. We'll have some time through this session to walk through some other stocks or ETFs or things like that. But right now, I just want to give everybody a good baseline for what I'm seeing in the markets. This is the latest update. It came in at 6:30 p.m. Eastern time last night, as I said. And it gives us data of the expectations of the market for today, tomorrow, and the next day. We've got up to 3 days of predictions available in this software. And I'm going to walk through them step by step so that you can understand what the AI is saying and what my interpretation of those artificial intelligence indicators are or is. All right. Down the right-hand side, we've got the price scale. We've got on the candlesticks, we've got some indicators. We've got a blue line and we've got a gray line with the shaded green and shaded red area between those two. This is a predicted moving average. And right now what I have on the screen is a short-term predicted moving average. And what I mean is it is giving us 1 day prediction around trend. So this indicator up here is a trend predictor. The blue line is a trend predictor. And in case you don't know what creates that blue line, it is a simple moving average that has been enhanced with artificial intelligence, and we've added predictive information into the calculation of that moving average. That transforms it not only to an exponential moving average, but a predicted exponential moving average. I know, kind of in the weeds there, but why I'm saying that is because there is actually predictive typical price in the formula, which means the shape of that blue line can tell me what that trend is expected to do over the next 1 day for this indicator. I have a 1 day, a 2 day, a 3 day indicator from a trend standpoint that I can use, and I'm going to look at all of them. So some of the key points, I'm always going to look at the blue line first, and I'm going to look to see where's the blue line compared to the gray line. I'm just going to call out this area at the beginning of the year here where the blue line was above and then it crossed below, and we see that crossover. This crossover is an indication of a downward trend over the next 1 day expected to start. As long as that blue line stays below that black line, that tells me the next day is still expected a downtrend. If that blue line is pointed down and that shaded area is red, I know that I've got expected bearishness to continue. When that line flattens out, I've got consolidation. And when that line points up and crosses again, I've got bullishness. So what I'm looking to do from a trend standpoint is analyze this and understand it crossover to crossover. That gives me an opportunity to short that market, ride that trend for a day or two, whatever it might be. Again, from an educational standpoint, the first element that I want to understand is what does the artificial intelligence saying about where the SPY is expected to go. So I'm just going to zoom in a little bit so we can look at the right-hand side of the chart. Here we go. I can see that at 6:30 last night, the artificial intelligence updated. We got a crossover where it went green to red, indicating bearishness expected in the 1 day trend. This is telling me I would be expecting the SPY to be lower today than it was yesterday. Not from just a price standpoint, but overall trend. Thank you for the hearts. Appreciate that. Thank you for the call outs in the chat box. I love the fact that you guys are getting involved in this. Hello, Isma. Good morning. Nice to see you again. Glad you're in this session. Yes. The question from Isma was, can you explain more about what conditions you expect from an execution, entry, and exit standpoint? That's what we're doing right now. So your question came in just at the right time, because the overall market based on the S&P 500 is expected to be lower priced today. Those VantagePoint users that had this information at 6:30 last night knew that that was the case just on that crossover, and can use that information to make some trade decisions. But we're not going to stop there. That's the trend direction. Let's talk about high-low prices. That's this bar over here. VantagePoint predicts the next day's high and low for every asset available in the software. So what I'm saying is, when you look at this chart and we look at the SPY, what we see is a grayish red bar. Let me explain what I mean by that grayish red bar. It's gray, but the predicted high is red and the predicted low is red, saying we can expect a lower high, slightly lower high, and a slightly lower low than yesterday. It doesn't mean it's going to be a down day. It means overall the high and the low are expected to be lower than they were yesterday. It could be a down day. It could be an up day. But from a range standpoint, this is the expected range of the SPY today. And anything within that range is powerful from an artificial intelligence standpoint. Sometimes you might even see price just barely get out of that range. But what this is guideposts. I use this as guideposts to understand what's going on from a SPY standpoint, what's expected to happen the next trade day. So this is saying today we would be expecting the SPY to be on the lower end of things, a lower high and a lower low. You pair that up with predicted typical price being lower, we're getting 3 bearish readings from the artificial intelligence, saying that we are expecting overall lower prices today on the S&P 500. All right, let's keep on rolling through this so that you can understand why we're seeing what we're seeing in the markets and what the artificial intelligence said about this. Remember, this came in last night. So all of this information I can use to make my decisions about the market today, about the SPY today. All right. Here's another indicator. This is the predicted neural index, and what this indicator is telling me that I'm expecting bearishness in strength and price, meaning the price is expected to be lower. So we got a trend saying down, we got a lower predicted high and a lower predicted low, and overall strength on the bearish side. Right now, all of the one-day predictive indicators that I'm looking at and two-day predictive indicators are telling me bearishness for today. Don't worry, we're going to go to the next day and the next day. But right now, I'm getting an assessment on what we see and what we're expecting for today. Down here, I've got momentum indicators. Now I've got a 1, a 2, and a 3-day momentum indicator down here. I'm going to hide the 2-day just for a second, and I'm going to hide the 3-day prediction just for a second. And now what I've got is an oscillator right here. I've outlined it. That's predicting 1 day's momentum leading into the future. What the artificial intelligence is saying is from this day going forward, momentum is peeling off, and as of 6:30 last night, expected to keep peeling off, right? So what that tells me is we've got trend bearish, we've got a bearish high predicted and a bearish predicted low, we've got strength bearish, and we've got predicted momentum saying down. This indicator is only drawn after the artificial intelligence has done its global market analysis and given me an expectation on this. So we were expecting the SPY to be lower today. We're not going to stop there though, because that's a good comprehensive view of trend, momentum, strength, and price. But we can get more momentum readings. We can get extended momentum readings. We can look at seasonals. There's a lot of things that we can do to further our hypothesis that the SPY is expected to be lower today. Hey, John. John's a family member. Recognize you, my friend. He says the SPY is trading currently at 472. Down half a percentage point. I don't trade without using VantagePoint. Thanks for that, John. I appreciate that comment. All right. So we got bearish. You said 472.71. There we go. I can put my cursor, if you wanted me to, put it at 472.71. VantagePoint's predicted low for the day was 472.56. So right where it's trading is at the bottom side of that bar. And so far, everything we're talking about, and by the way, thank you for that price call out, John. Everything we're talking about is happening. We're not going to stop there, though, because there's something else that I want to pull into this. And that is a 2 or the 3-day prediction, because I said in this write-up for today's session, if you read the chat or the notes, so we're going to look at what the artificial intelligence is expecting for this week. So let's go to the medium-term crossover. We know the 1 day was expected to be down. Let's look at the medium-term crossover and see what we got on the medium term. All right. The medium-term crossover is a 2-day prediction. So I changed it. You can see it says medium prediction. I changed it to add it to 2 days. And what this is saying is the blue line is still above, but look at it, it's pointed down. So this is saying consolidation in trend over the next couple of days. So we've got weakness on the 1 day, bearishness on the 1 day, and 2-day trend is consolidated sideways. I am also going to go add back that medium-term difference. That's that line down here on momentum. Momentum went up and then started pointing down. We're getting consolidation here as well. Some people might call that bearish. You could call it bearish consolidation, but this is a 2-day momentum saying over the next day or two tomorrow, we're expecting some consolidation in this trend. So far, all we have is bearish consolidation so far this week expected from the artificial intelligence. Hey, Steve. Volume and momentum. Yes, we are going to walk through volume and momentum, Steve. Thank you for that prompt in the chat. I will show that to you, break it down step by step even further than we already have. But what we're seeing here is consolidation over the next 2 days. I am going to go in and I'm going to put on my 3-day indicators, my 3-day momentum indicator here. It's a predicted 3-day. And if you haven't ever looked at VantagePoint before, let me hide the 2-day and hide the 1 day, and you can see what I mean. It's this navy blue line. And lo and behold, it's setting lower highs. It's flattened out. So all in all, momentum has been falling for quite some time on the 3-day predictor. And right now it's saying over the next 3 days, we're expecting momentum to be consolidated sideways. So all we're getting from this week is bearish today with some consolidation over the next 2 or 3 days from the artificial intelligence. This information, in case you don't know, from an accuracy standpoint, is up to 87.4% accurate, which means I've got some very powerful information at my disposal here. If you're a VantagePoint family member, so do you. The question is, how much are you using it? And are you doing this kind of analysis? And I hope so. This is what we train. By the way, if you're not using VantagePoint, not only is this incredible software, but we have world-class customer support and training resources to help you do what I'm doing in case you don't have it. And if anybody is looking at this and going, okay, that makes a lot of sense and I want to talk to somebody about it, just go to VantagePointForecast.com. And when you click on that, fill out the information, we can reach out to you. You know, I'm not here selling the software. I'm here showing you how to interpret and use it. But if you've got some specific questions that you want to dig into, let somebody on our team know. We'll be happy to dig into them. The phone number is also in the chat if you scroll up in the chat. All right, let's keep it rolling. I'm going to put all those indicators back on so we can see our medium term or short term. I'm going to pull this back out to 3 months just so everybody can see there was this big uptrend that is now faltering. And I want to show you something else. I want to show you the fact that we've got a 52-week high right here around that 479 number. Matter of fact, I'm going to show it to you. I have an indicator that'll identify it for me. There we go. 478.60 is a 52-week high. And it was just set last week on Friday, right? Now, Thursday held the previous high spot. Wednesday might have held the previous 52-week high. Last week had a 52-week high, but notice something. Prices have stalled at 478.60, 478.50, whatever you want to call it. This 52-week analysis is a 52-week high, and if anybody isn't doing the 52-week analysis, let me tell you why I like it. Whether you use this indicator or not, I don't care. Just understand what the high of the last year is and the low of the last year is and how it's impacting price currently, because price is really struggling since the end of last year to get past that level and stay past that level. If I put this dotted line on last year's 52-week high, you can see this year price went up and broke it. It touched it here, it broke it here, and it broke it here. But notice something about these candles. Although it broke the 52-week high, it could not close above it, and it came back and settled almost exactly on the 52-week high of last year from December. 2 days in a row. Well, at that point, price, I'm going to call it price, said, all right, that's too strong for me, and we almost have a doji candle here. For those of you that do candle analysis, you know that there's a major indecision candle happening right here, right now. It's one of those scenarios that says resistance is real, and we have momentum failing, indicating that there is not enough momentum to break that resistance level. For those of you who do support and resistance analysis, there are two things that can give you hints on whether or not prices are expected to break resistance or support to the downside. Steve already told us what those two things are: volume and momentum. I like to call them VOMO, by the way. But volume and momentum can give you some hints around whether or not that resistance level can be broken. Well, we already see our momentum peeling off. Let's add some of those other momentum indicators that you're probably familiar with, right? Here we go. Take a look. If we move into this right now, we can see, here we go. I'm going to add a MACD. This is a predicted MACD, all right? I'm going to show you exactly how to interpret this down here at the bottom. With a MACD, you get a moving average, convergence, and divergence. That's what it is. The crossovers are the key. That's a bullish one. This is a bearish one. So we had a predicted MACD capable of predicting 1 day in the future, telling us at the end of the year last year, momentum is peeling off. Matter of fact, look, momentum was consolidating into the end of the year when that high was set. That high was set in a market that had really no more bullish momentum. It couldn't stay up there, and it didn't. This is a forecast of bearish momentum, and that forecast hasn't changed the entire time, which means if I am losing momentum or I'm gaining bearish momentum, 52-week highs are strong. That bearish pressure is going to keep pushing down on this market. In this case, it's the SPY. And the artificial intelligence told me that that was expected to happen. So I already know going into this that 52-week high from December 28th, even when this resistance retest comes back into play, is strong. And I know that because momentum isn't there to support the push through that 52-week high. For those of you that like to look at support and resistance, this is one of the best ways, in my opinion, to look at support or resistance, is to put it on your chart and then evaluate it against momentum. I have verified support and resistance zones in my software where I can just add them to the chart, and you can see not only is this an old resistance zone that's holding price down, but there's another one back here that is probably goes back further than a year, because it's not the 52-week high at 480. So I've got a lot of resistance up here, and I don't have enough momentum. I don't have enough up force. I don't have enough tailwind, whatever you want to call it. I don't have enough in the momentum area to push past those higher resistance levels. Now, that's not advice. That's just my opinion from an educational standpoint. That's what I'm looking for when I'm trying to analyze this information. One of the other things that this support and resistance helps me do is recognize that there's a long way for this to fall before there is any type of floor, or before there's anything to prop up price. Down here at 466, it's got a little room for the SPY to fall. Is it going to fall all the way to 466? I don't know. It's not going to fall there today. The artificial intelligence, the AI, is telling me where it's expected to fall to today, right where it is right now. Every day I download the data, I take a look at it, and I look at this chart to understand what's going on from a support and resistance standpoint and a momentum standpoint. And right now I'm getting a lot of bearishness. But we're not going to stop there. We're going to keep on working through a subset of indicators. Here's predicted RSI. Predicted RSI is on my chart now, and you can see RSI is a momentum indicator. If I connected these RSI, you'd see bearishness happening from the middle of this uptrend last year. Momentum from an RSI standpoint was peeling off the entire time, and the update from last night has a lower RSI as well, telling me I'm expecting some bearishness as well, right? And I can do this same kind of analysis. I like to do a deep dive on momentum, and I like to use things like TSI, which is a true strength indicator. I like to use percent R. I like to use stochastics because it's sensitive. I like to layer these on, and then I can walk away with a very comprehensive momentum assessment, right? The momentum assessment that I'm walking away with is bearish. Look, bearish. Bearish. TSI is bearish to consolidated. It's kind of moving sideways. Stochastics is consolidated. It's sideways. So not all of the indicators are bearish. There's some consolidation happening as well. So I've got consolidated bearishness from a momentum standpoint. That does not support a bullish trend. It does not support a break of resistance. Got a question in the chat box. Walter says, are the support and resistance verified indicators the same or different? Verified support and resistance is what I have on the chart. I don't know if that's what you're asking. The 52-week look back is not, this is a little different analysis. I think that's what you might be getting at. Hey, John, I love them too. John loves the support and resistance indicators, potential price roadblocks. I like the way you said that, roadblocks, right? Roadblocks can be broken. Roadblock, it's not a mountain, right? It's a roadblock. Roadblocks, somebody can move it out of the way. Right? I think about a construction worker or police officer, right? With the right volume and momentum, they can move the roadblock so that I can go on by. That's what I'm talking about. Thank you for that. Appreciate that there, John. I appreciate that, that comment. All right, let's keep on rolling. Let's keep on rolling because we've got a good assessment of momentum. I'm going to kick off MACD. By the way, personally, I like to keep all these on my chart and I analyze them very quickly, one by one. But for ease of training in this session, I'm going to take them off the chart just so we've got more real estate to do some analysis on, right? Because the next level of analysis that I want to do is I want to look at volume. And with volume, I'm going to use volatility. By the way, all these indicators I'm using are available in the VantagePoint software. Not everybody uses them all the time. Not everybody has them. If you have any questions about that, reach out to me and let us know by going to VantagePointForecast.com or just giving us a call. I'm going to go to average true range. Average true range. And the reason I'm doing that is because I like to look at volume and ATR together. ATR is measuring the candle, ranges from the high to the low. Actually, there's 3 calculations in ATR, but it's basically telling me if bigger candles indicate more volatility. Now, volatility could be good for a bullish trend or good for a bearish trend. Traditionally, understand that higher volatility scenarios are usually tied to bearishness in the market. Let me give you a good example of that. We're seeing the SPY decrease, right? We're seeing the SPY from a one-day standpoint say down. Well, the volatility on the SPY is measured by the VIX index. If I go to the VIX, I should see the VIX increasing or going up because an increase in volatility traditionally means a decrease in the index or in the SPY in this case. Here's the VIX. What do you see? VantagePoint forecasted on Friday an increase in the VIX starting. We can see everything turning up in the VIX. Well, if everything is turning up in the VIX, what would I expect in the S&P 500? Pop quiz. Not really a pop quiz because I kind of gave away the answer. But go to the chat and get involved. What would you expect if the VIX is increasing, if volatility is increasing, what would I expect the SPY to do? By the way, this is a prediction of the VIX that came out at 6:30 last night indicating bullishness in the VIX. Let you guys go over to the chat. Hop into the chat. I got my eye on it. Even if you don't know the answer, guess. There's no wrong answers here. Like I said, this is educational. This is a way for you to, get as much information about the markets as possible. Well, I'll tell you, if the volatility is going up, we would expect the market to go down. There you go, Ray, Walter. Yep. Consolidation or down day. Yep. All right, good. We got it. Down, bearishness. Good. So we're all on the same page. We're all on the same page. All right, good. So when I look at ATR, I can see my ATR is slightly sideways. It's creating a little bit lower highs, higher highs, a little bit higher lows, right? So I've got a little bit of an increase in the VIX, which indicates, in the ATR, which indicates some bearishness, but I also have increasing bearish volume. Look at the last 5 candles. Bearish, kind of equal bullish, big bearish, lower bullish, big bearish. I've got increasing bearish volume paired up with an increase in volatility or bigger candles, all indicating bearishness, bearishness. So my volume, my ATR reading is giving me bearishness and consolidation at best. My momentum is giving me bearishness and consolidation at best. My trend predictor from the AI is giving me bearishness. My predicted high and predicted low is giving me bearishness. My strength indicator is giving me bearishness. I've got resistance up there that can't be broken because there's not enough volume and momentum to break it. If I sat there at your desk and said, okay, this is what I'm seeing, and I said everything that I just said, you probably wouldn't even think twice about expecting some bearishness in the market today. I've got that advantage because I've got VantagePoint, right? I've got VantagePoint giving me that on a daily basis the night before the market opens. All I've got to do is walk through the analysis. Now I can do what I'm just doing right now very quickly, but still, that kind of analysis is key. All right, let's go take a look at some seasonal information. What is the seasonal pattern of the SPY right now? I put a green line on the chart. I'm going to remove some of these other indicators just so you can see that green line. The green line on the chart is measuring the day-to-day yield from a seasonal standpoint. And you can see the day-to-day yield is creating higher highs, higher lows. So we've got bullishness and overall in the big trend. But it turned right here lately saying, oh, you know what? From yesterday to today, the predicted information has a lower yield seasonally, bearishness on a seasonal standpoint. This is a Larry Williams seasonal pattern indicator that I use to help me understand what happens seasonally overall and right now in the short term. I can get a long-term reading, like I said. Overall, long-term has still some bullishness in it. Short-term has some bearishness in it. So my 1 and 2 day information is certainly supporting more bearishness. If seasonally it's telling me that overall there's bullishness, then that's also giving me some support to say I'm not expecting a major market crash. One of the other things that I can use is this triple cross indicator. What I just put on the chart are 3 predicted moving averages. 3 predicted, and I know I'm moving through this information quickly. The reason I'm moving through this information quickly is because I want you to leave this session today understanding what the AI is saying about the SPY. Short term, 1 day, and long term, 3 days. Overall, we're getting consolidation from this, and you can see there are 3 predicted moving averages on here. The 3 predicted moving averages have a 1 day prediction, a 2 day, and a 3 day. This is an 18-day predicted moving average. It has 3 days of data generated from the AI that's predictive in the formula. So if I see prices above that very thick line, that tells me overall longer term, I still have some bullishness or some consolidation at least. This price point, this level, if you will, T-cross long is 472.02 right here. That is a level, if I see prices above that level, my longer term expectation, 3 days, still has some bullishness or consolidation at least in it. So 1 day bearish, consolidation 2 days, consolidation 3 days, which means I'm not expecting a major market tumble, barring any weird fundamentals, over the next couple of days, next few days. That's from the artificial intelligence. Now, nothing is perfect, right? I'm not saying anything is perfect. Hopefully nobody's hearing me saying it's perfect, but it gives me a good sense, a good sentiment. I call it the AI sentiment of what's expected to happen. If that AI sentiment is consolidated over the next few days, then I know how to apply that to my trade plan. If the AI sentiment over the next 1 day is bearish, like we've seen here, then I know how to apply that to a trade plan, and I believe you do too. If you had somebody sitting next to you going through the analysis like I just did, or you had this software, you could probably come to that same conclusion very easily. All right, not seeing any questions roll through, so that means at least I'm explaining it in a way that you can digest it, which is good. So we're going to keep on keeping on. I am going to go back to that crossover that we were on, the medium term, and I am going to put on another indicator just to give you another sense of what's going on. And I'm going to put on, let's go Fibonacci. VantagePoint has a predicted Fibonacci in the software, and the reason I'm putting it on really quickly, it's pivot point, is just to show you some different levels that are available within Fibonacci retracement. Check this out. This also has predictive information in it. It's using a very short-term weekly Fibonacci, and you can see the Fibonacci level is 61.18 right there, 61.8 or 618. That level is very clearly at 471. If prices get down to 471, Fibonacci tells me, and this is a predicted Fibonacci, that I am expecting it to do a couple of things. Potentially bounce off of 618 or break through 618 or stagnate on 618. This is the golden ratio, and this is the golden envelope. If I can get prices into the golden envelope, which is just below 61.8 and above 76.4, what price does there is very, very telling. Right now, I'm not there yet. So I can expect some more bearishness in the short term. I can expect bearishness down to 471 over the next few days. And then if price bounces off of that, that's where I would get that consolidation and bullishness going forward. If prices break through that and go lower, that is a Fibonacci extension pushing prices lower and lower. So something to think about. If I get a bounce, that's a Fibonacci retracement, and that tells me something about the market as well. Personally, based on what I'm seeing, not advice, but I'm expecting somewhat of a bounce off of that golden ratio and prices moving back higher towards the end of the week into next week. But short term, no doubt about it, I'm seeing bearishness across the board. So let's answer that question. What is the artificial intelligence saying about the fact that retail prices are up? I don't know. It's not guaranteeing, it's not predicting retail prices. What's it saying about the fact that interest rate cuts could be delayed? It's not saying anything about that. But what the AI is saying about the market is that all of that stuff that you're hearing from the talking heads, all of that stuff you're reading online, it's digesting all of that through price. And what VantagePoint is saying about price and the VantagePoint software is that we're expecting bearishness over the next 1 to 2 days with consolidation outside of that. Nothing, no major doom and gloom in the short term. We're only up to 3 days. And for you swing traders, you day traders, short-term position traders, that's some powerful information, right? All right, good. I've answered the question that I wanted to make sure that I answered. I'm going to give you a chance to throw a ticker symbol or two into the chat box. I'll pull some of those ticker symbols up, and I will take a look at them, and we can walk through some of this analysis. We may not walk through everything, but I'll walk through as much as we can over the next 10 or 15 minutes or so to get you some of the answers you're looking for. All right, let's see what we got. While you're looking and you're thinking about what ticker you want to pull up, I'm going to pull up Apple, just so that those of you that are already thinking Apple, trading Apple, or talking about Apple can take a look at what the artificial intelligence is saying about Apple. All right, so when we look at Apple, we can see we've got some bearishness overall. Man, by the way, we're talking about 3 lights out forecasts. Let me pause for the cause for a second. Right? If we outline crossover to crossover, and I'm just, these are hypothetical, but if I'm just outlining using the analysis that we just walked through on Apple up to this point, these are the hypothetical gains. Look at this. Talk about some lights out projections. Here we go. All right, for 16, 17, 20% gains in 3 trends. Having an underlying asset or having 5 contracts of Apple, that is tens of thousands of dollars in hypothetical gains. This is pretty incredible. So what we're seeing from an Apple standpoint as of right now in the software is when we look at this, we can see that we've got some potential bullishness in Apple. Not a whole bunch. It could be a down day. We've got the blue line crossed above, but then consolidated. So we've got a lot of indecision in Apple, right? I've got momentum telling me consolidation of bearishness. I can go through and put on the host of indicators that we just walked through, and walk away with a pretty good assessment of Apple. Look, I'm talking and clicking at the same time. So if for some reason it's not making sense, let me know in the questions box. But I'm going to add my momentum indicators. I'm going to add my stochastics, TSI. What else do I have? I got percent R. And I'm just popping on the indicators that we just did some analysis on. Heck, I'm going to go put on the 52-week look back and see what it says on Apple. And don't get me wrong, let me just clarify something. For those of you that aren't using VantagePoint, I'm doing an advanced analysis here. All of these indicators, you don't have to use them in the beginning. They're not even part of the license in the beginning. These are additional indicators that I like to use to get a more comprehensive view. You can use the 4 points of confirmation, and you can see how easy it was to get the analysis from that 4 points of confirmation. I'm adding these so that we can continue down our talk track that we did today, including volume, including ATR. Here we go. All right. Lot of consolidation on Apple. Look at this. Bearish, consolidated, consolidated, bearish, bullish, consolidated, bearish, consolidated. We've got increasing bearish volume, which is bearish, consolidated here. We've got bearish here. You got bullish here, bullish here, bullish here. You got a resistance level pushing down. You got a support level pushing up. What are we expecting from Apple? We're expecting Apple to basically be right there, right? Downside, bottom side of that candle, but above that support level of 180.20. So it's not going to get below 180.20 because we have consolidated momentum. And the predicted high and predicted low from VantagePoint are saying you could see it around 180, 194. It's in a channel. Apple is getting squeezed right now by support and resistance, and it's going to stay right in between those two until it can have a resistance breakout or a support breakout. We're going to need momentum and volume to tell us which way that's going to go. And right now, we don't have any of that. So consolidated sideways move on Apple, 181 and change is what VantagePoint was saying last night at 6:30 p.m. Eastern time. All right, the next one that came through, there we go. John says 182.03. 182.03 is where Apple is. Let's, bottom side of that bar, bang. Right about there, right in that channel, consolidated. Thank you, VantagePoint. BA. You know what I'm going to do? I am going to save this as a default view, just to speed up so we can get to a couple more tickers here. Boeing, there we go. A lot of stuff going on with Boeing in the news. The question is, did VantagePoint indicate that Boeing was expected to reverse? Yeah. How about at the end of the year last year? How about this Boeing trend? Who was asking for this? BA, John. Not sure your position on this, but this is at 42% in that bullish trend. And then if you buy puts, short the market, write some covered calls. This was the projection on Boeing starting the beginning of the year. That's 65% hypothetical gains, 200 contracts. I mean 200 shares, excuse me. If I kick that to 500 shares or 5 contracts, depending on how you trade, it could be 100. It could be 10. That's almost $70,000 in hypothetical gains. That's huge. Let's just go 50 shares, right? No matter how you slice it, what I'm saying here is that these gains on these two trends are astronomical, and they were very clearly forecasted with the artificial intelligence. Let's see what it says right now about Boeing. Right-hand side of the chart. Blue line is below, pointed down. Everybody can see that. We've got a predicted high and a predicted low. Ooh, that predicted high is right at that old support point that's trying to act like resistance. Heck, I could see prices sitting right there, 205. We got our bearishness from the neural index. We got our bearishness from the predictive differences, bearish momentum. Let's drop off some of this stuff. Let's move some of this stuff out of the way. Ooh, look at ATR. ATR is moving higher with increasing bearish volume, telling us that there is bearishness here. Consolidation, bearish, consolidation, bearish, 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 bearish. Support point here, support point here. A lot of stuff happening from a Boeing standpoint. Bearishness and consolidation at best. There is a little bit of the predicted high is saying it could still be, an up day, if you will. But what I would be expecting is 204, nothing more, nothing less. At a low of 196, it's probably going to stay above 200 based on what we're seeing here. But yeah, nothing from a trend reversal expected, John, based on the artificial intelligence. based on what I'm seeing in the charts. And this is looking at a lot of stuff. Look, check this out, folks. This is what the artificial intelligence is looking at to do the analysis on Boeing. Look, it's looking at Stanley Black & Decker. It's looking at the Qs, Aerospace and Defense ETF, Oxford Lane Capital, Hawaiian Electric Industries. Some of these things you would never believe drive or influence Boeing. Some of them make total sense, like Invesco Aerospace and Defense ETF. Marvell, that's a tech company. The AI has figured out these are the things that can influence Boeing, and that's why these forecasts are so accurate. That is patented. That is called intermarket analysis for those of you that are unaware of that. All right. Currently at 202. All right, John, there you go. 150 shares is a short side, I hope. Currently have a short. There you go. Okay. All right. All right. There you go, John. Nice move. Nice move. I don't know when you got those last couple of days, so that means you've probably got a nice substantial move. There is support down here, so I need to see some of these consolidated momentum indicators turn more bearish to say I'm expecting more bearishness. Right now today, I'm expecting some bearishness, a little bit of sideways, and we need it to fall some more to make that a really, really good position for you. Tonight's data download will give you that, my friend. All right. IWM, Mark says. IWM, I have puts. Mark, what's your strike price on the puts and your expiration date? We see it set a 52-week high up here. Things are falling off of this. We can see, oh, this is important. Let me point this out to everybody. IWM, which is a Russell, has a support point down here that it has failed to break and stay below multiple times until yesterday. Yesterday, we got a break of that support point. We can see we got to close below it. That is one day. The way support and resistance works, in my book, is I need two confirming closes after that break to say it's expected to go lower, right? I can get some hints about it expected to go lower from the other indicators. Predicted low is expected to be lower. We can see it jump down. Neural index is bearish, bearish, and consolidated, bearish on volume, bearish on ATR, bearish on percent R. We have more bearishness in the Russell than we've seen in a lot of the other assets. We do have a support point trying to pop it up. We could see it pop below that support point, grab a quick run to the downside, and then stagnate based on this, but certainly expected to go lower today. I don't know where it is. Joel, you shorted at 261. That couldn't be this. It's got to be Boeing. You sorted at 261. Oh, Joel, hopefully you use the software for that and grab that move to the downside right there. Joel shorted, it looks like Boeing at 261. That's, again, money in the bank. Mark on IWM, 186, expiration 126. So you, my friend, are you bought an out of the money put, and you're hoping it gets down to 186. You know, I don't know from a delta standpoint, but that delta was probably pretty low. So you need it to move probably a little bit more. I don't know where IWM is right now, but VantagePoint is saying certainly expecting bearishness overall. But because of this support point and only one break below, we've got to be cautious about how much bearishness we expect in the short term. So think about that. That support point is sitting at 192. So anything south of that for the next couple of days says we could see a support breakout lower and potentially down to 183. But artificial intelligence is certainly saying bearishness with some caution, my friend. So good. Glad to see that. Let's grab another one here. The next one I see was Boeing, IWM. Winder, LSTR, going in order. So this is the next one that I saw come in. Landstar Systems, okay. 52-week high is not a concern, it's way up here. We got some short-term bullishness on Landstar, neural index is green. We got a sideways predicted high and predicted low. There's plenty of room to resistance. So what we're seeing from Landstar is potential bullishness so far. Momentum is bullish, consolidated, bullish, consolidated. ATR is sideways. We've got some consolidation in volume, percent Rs creating higher lows. So we got more bullishness in this one than anything, right? We've got some room, but today's trading range is saying sideways kind of day. We could see prices, between predicted high 194.77, predicted low of 191.06. Anything within that is expected today, and the overall trend on this is expected to be bullish. That would be a counter trend trade to the overall market. So who was asking about this? When I say counter trend trade, Mr. Singh, is because I'm saying the market is expecting bearishness. Landstar's individual forecast is expecting bullishness. It doesn't mean it's not a go. It doesn't mean it's not good. Just understand that a counter trend trade to the overall market, to the overall artificial intelligence sentiment and trader sentiment is a higher risk, in my opinion, a higher risk opportunity, needs to be watched closely. Money management needs to be in place more so than it is in some of the other trends that go along with the overall trend. So again, I'm not saying it's a no. VantagePoint is indicating bullishness with some consolidation today, but you got to be wary of that. Let's check our short-term one-day forecast. Okay, that looks good still. Long-term, 3-day, bearish to consolidation, and our triple cross. Triple cross, we got prices above that T-cross long. So still some more bullishness there, but understand it is a counter trend trade, and you got to be aware of that. You're very, very welcome. I am out of time. I apologize. I can't get to more of these tickers. There are a lot of them in. If you didn't get one of the tickers analyzed that you wanted to take a look at, I'll put XOM up on the screen just so you can look at it as I'm closing out this session. But if there's a ticker you want to dig into, or maybe you want to talk about VantagePoint software further, got questions, reach out to us. You've got our VantagePoint University phone number and contact details. If you don't, and you're not a VantagePoint family member or a user, go to VantagePointForecasts.com, fill out that form. We'll reach out to you and make sure we answer your questions. Aside from that, let me just say thank you. Thank you for taking the time to be here and listen. I hope everybody has a fantastic 2024, and thank you for letting me give you the view from my vantage point. Everybody have a great day. Thank you. See you guys.